So you able to see my screen?
Yes, sir.
Okay. Now we have assets. Okay. Assets module. Under assets module, we have assets means for which we are going to generate some economical benefits. Okay, that is some kind of property for us. Okay, so assets are two types. One is the current asset. Okay, for this current assets means you are going to realize the value, the economic value within 1 year. Okay, it is less than 1 year. Current assets and fixed assets, it is more than 1 year. Okay, if any asset that is a kind of fixed assets we are purchasing and it is completely depreciable within 1 year, that is a expensed assets. Okay, expensed item. Though it is a fixed assets, but it is depreciable within 1 year completely. Okay, so that is an expense item. Let's say mobile. Okay, some companies depreciate mobile in the same month when they purchase it or in the year when they purchase it, and that's the reason they treat that item as an expensed item, not as a fixed asset, but they manage that mobile as a fixed assets item to have a counting of that means every time when you have a fixed assets, you must do the fixed assets counting as well. So tomorrow when the audit of fixed assets will be happening, the fixed assets will be counted during the audit, and any variances between the system book entries as well as on the physical inventory need to be taken with the care, some adjustments to be passed or something to be done, or retirement of the assets, loss of the assets need to be done. So for fixed assets, we have a separate module that is work based on the ledger. It is not based on the operating unit. Okay, actually fixed assets module was left over. Means it was not prepared at the time when the complete ERP package was getting designed. And later it was designed and attached to the ledger directly. So though it is a subledger, fixed assets is a subledger like accounts payable, accounts receivable, it is attached to the ledger. Whatever you do, it will post in the ledger directly. It is not related with the operating unit. We will see all this together. Okay, now we have fixed assets as leased assets, own assets, like non-leased assets, and CIP as a type that is called as construction in progress. Okay, suppose you are building one factory building and that is under a construction. So whatever cost and whatever labor charges you are going to incur for this factory building, you have to transfer all the items to the CIP once that asset is ready, and once that asset is being started for use, that CIP asset will be converted into capitalized assets. And the day when it is getting capitalized, from that day only it will start calculating the depreciation, not before that. Before that, it will just accumulate the cost. So in the asset module, we are going to see how to create do the addition of the fixed assets directly, because once you are going to implement the ERP system, already one legacy ERP system will be there in the company. So already fixed assets will be maintained in somewhere in the Excel or somewhere in the legacy system. So that all will be transferred to our new Oracle system, that is Oracle EBS or Oracle Fusion. So when we do the transfer, it is the addition or mass addition, not mass addition, it is the addition or quick addition of the assets. That is assets master data we are transferring. Later, when we do in future purchases of new fixed assets, we are going to add that assets to the assets already available. Suppose mobile, let's say vehicle, we have two-wheeler and four-wheeler both available. So right now we have one two-wheeler and one four-wheeler available. Later in future, we are going to purchase another set of one four-wheeler and two-wheeler. So that when we will add, what will be happening, what is the process, and we are also going to see how accounts payable is connected to the fixed assets module. So the assets can be transferred, assets related invoices can be transferred to fixed assets module. Okay, so first task is the creation of responsibility. You go to the system, navigate, system administrator, security, responsibility, define. So we are going to define the fixed assets. This is the standard responsibility for fixed assets. We are going to define it. Fixed assets, super user, IT India, application assets, responsibility, FA, super user, IT, yeah, 1st Jan 2000. Now we have standard asset and the menu is FA underscore main. Request group is all reports. All reports SS. All reports and programs SS. And no exclusion. We save. Now we assign this responsibility to our user ID. Security user define. Query press F11. Come to here. Add one row, give responsibility, assets module, save. Now close this window. So responsibility created, responsibility assigned. Now profile options. At the responsibility level, HR business group, HR business group, IT corporation. HR security profile. HR security profile, we have to assign it IT corporation. This is always mandatory. Why we are assigning HR security profile and business group? Because our employees are connected to business group. And that employee we also use in the fixed assets assignment window, where our fixed assets will be assigned to particular employee, and it can be transferred from one employee to another employee as well. So this is what we created as a fixed assets. Okay. We have another responsibility, a profile option, GL, ledger, name. Okay, GL ledger name, IT India ledger INR. Okay, always assigning it to INR. Why? Because that is our main ledger. Not we are not using the currency ledger, because that is by default all the entries will be transferring to reporting ledger. Then we have MO operating unit. Okay. Why MO operating unit? Because we are going to transfer the details of fixed assets purchases from accounts payable to fixed assets module. And if we do not connect this operating unit to our responsibility, it will not allow us to transfer the fixed assets purchase details from accounts payable to account fixed assets module. That's the reason IT private limited operating unit assigned to the fixed assets responsibility. So this is done. So we created responsibility, we assigned the responsibility to user, and we updated the profile options for the responsibility. Now change the responsibility as a super user IT India. So we have this many menus, and our first task, setup. Under the setup, we have multiple things. Asset system. Under asset system, we have book control, asset category, fiscal year, calendars, flow rate, convention, system control, location, asset key, quick quotes, price index, lease, distribution warranties, cash generating units, Japanese depreciable assets. Then we have depreciation. Under depreciation, we have method, bonus rules, ITC rates, super groups. Then financials. Under financials, we have tax fields, general ledger, financial system options, supplier, organization. If you go here, financials related thing, we have employees creation, supplier creation. Supplier we can create over here, but mostly we are going to use the AP module. Employee we cannot create here because fixed as a human resource module is already implemented on this system. So if you are using a human resource completely, you have to use the human resource module to create the employees. Then supplier organization, financial system options, it is the same as the accounts payable details. Okay, it is having all these accounts payable details. We have general ledger system. Under general ledger, we have ledger related setups, period types, GL, calendar, currencies, all these categories, and flex fields. Flex fields are two types, key and descriptive. Descriptive to capture the other values which we cannot capture with the key flex fields. Key flex fields are the characteristics we are going to assign to our modules. Okay, so for assets module, we have three flex fields. Like for GL, we had the accounting flex fields where we defined the chart of account segment. For fixed assets, we have three segments. Press F11, application, assets, and here first is the location. Okay. Here you cannot create any more new items. Okay. This is the standard coming with the system, and you have to use this throughout the system. It will not allow you to, if you go to the next row, it will not allow. This new entry is also blocked. So this is location flex field. If we see in the location flex field, we have country, state, city, building. These are the location. Okay, but you can very well edit this location flex fields. Okay, suppose I remove the. I have to first unfreeze the flex field. Okay, then I remove the cross validation. Allow dynamic insert enable. Okay, I go to segments. So this value set, I can very well change it. Okay, it is in my control that I can change any of this value set, and this value set, let's say, right now I'm not doing that. Yes. Flex fields cannot be created. Okay, update to old cannot be allowed. Okay. We see what is the values available in the. Okay. We have values available for India. P country, P fixed assets building, P FA city, P fixed assets state. Okay, let's see FA building. What is the value? Corporate. Okay. These are the values. So as we cannot update the values on the already defined segments, assets, location, under the location we have four segments. That is the country, state, city, building. Okay, we have to use these values for our location flex field. Then we have another flex field called asset key flex field. Asset key flex field means it is going to assign some kind of key or some value to your fixed assets. Kind of, it is a kind of grouping. Okay, it is not mandatory one. You can use it or you can ignore this. But most of the company use this to group their asset. Vision FA asset key. Let's go and see what is the values available over. Okay. So we have fixed assets keys available like this. Now we go to the last one. Category flex funds. Okay. Under category flex fund, we have two segments: major category, minor category. Okay, this is to group your asset into a major category, then to a minor category. We'll see what all the things are available. So we have different types of categories available. Automobile, bike, vehicle, building. Let's say we have defined one major category as building. Okay. Under that building, we will have office building, factory building, warehouse building, etc. So all this will come under the building category and minor category. So under the major category, we group under the head, like say vehicle. If you are defining as a vehicle major category, under the minor category, you will have two-wheeler, four-wheeler. Okay. You can have two-wheeler, four-wheeler truck, or you can have two-wheeler, four-wheeler pickup and truck, like this, under the minor category. But then we go and see. Under minor category, what all? All small categories. So this is the value for minor category. Now these all values are defined, but we still will be defining for our purpose few categories, one or two categories. We will use that categories for our use. So first close this. Just say first we have to build our asset system. Before we build our asset system, the first thing is creating the calendar. Or we can create the location. Okay. Under location, you can Yet, if we have state of we have Telangana also, that's the city. Chennai is not there. So what we will do? First, we update our just that's key values. Country we have the values for India. Under the state, we update the value become find. Under the state, we add some save. Under the location, we had four flex fields: country, state, city, and building. So out of this four, I updated the state one because country already having the value called India. Now I click over here. I will go to now city. Under the city, I will update the value called Chennai. Okay. And the last one, the building. Building. Under the building, I am going to update IT or okay. Office. So our all assets will be in the corporate part. Corporate office. Okay. It is validating. So our values updated for this four value sets for location flex field. Under the asset system, we are going to update our location. Under location, we will see India, state Tamil Nadu, city Chennai, IT Corp. Google, you can search this error. Assets. If we go to that segment, look this. Here we have enabled the cross-validate the same. And because of this only, it is not allowing us to proceed further. Because it is looking for the value sample entry error. That is a kind of form that is created. So let me disable that rule. Cross validation. Location flexible. Okay, this is the only value is defined. We have multiple rules. These rules are not allowing us to proceed further. So let's disable this rule. Once we disable, we will be able to proceed further. Cross validation, if we enable it, it will look for the values combination which is allowed and values combination which is not allowed. We will discuss this more into detail when we will go to the general user module. So right now we disable it and go to locations. And the location now we can create India. And I click on it's okay. Okay, now we have to once we update the cross validation tool, so we need to maybe log out and log in again, and this is we enabling it. So this data is saved. So we created the location. First, what we did, we updated the value set with the values. Now we updated the location. The next setup part for the asset system. We have to define the fiscal year. Okay. Name of your fiscal year. Okay. Fiscal start date 01 2050. December 2050. Fiscal year 2050. It is automatically creating 16. Okay. Here you must create the 1 year more than the current period. Okay, so today is 21st. Today, the current year is 2021. So we must create at least 2022. Otherwise, our depreciation will fail. Okay. Otherwise, our depreciation will fail if we do not create the 2022. So we have details till 2023, 2024. Okay. So our ITC fiscal year will have years like this. Now create the calendar that is called depreciation calendar. Calendar name. Details per year. Okay, if what you want to suffix. The period number 1, the name must be same as what you defined in your general ledger periods. Okay, so if you are not sure, you must go there. If we are this much information only, and we must go and check. If you are not sure, you must go and check under financials. General ledger calendar. F11 IT first IT com. This is what we defined it. Okay, our period name is Jan 21. Okay, Feb 21, March 21, like this. So you must create the same way. Okay, so name is coming as Jan 21, and you must manage this caps letter, small letter also, otherwise it will be a problem. So your accounting calendar and depreciation calendar will share the same naming convention. The name here is Jan 21, Feb 21. Like this, we have to create the same for our assets depreciation calendar. Calendar. We created one IT ITC calendar 12 pages. Jan 21. First Jan 31st. Feb 21. March 21. April 21. May 21. June, July 21. August 21. September 21. October 21. November 21. December 21. Jan 22. uh, 22. 24. April 22. June, July 22. August 22. September 22. October 22. Okay. Till 2022, we are defining our pivot. Okay. So we created our calendar as well. Fiscal year calendar. Now we have prorate convention. Prorate convention we use to determine from which date or from which period we start the prorating a depreciation, and that will be prorating. So we have like this prorate conventions already defined, few of them. Okay. Under prorate convention, what happens? Suppose if I give end of the period as a prorate date, means if we acquire in any asset in this period, the in asset will get depreciation calculated from this date, 31st of Jan. If we give Jan 1st, okay, begin you can give from the date like this, 1st of Jan. If you are giving 1st of Jan, if whatever the assets you acquire in this period, you will completely calculate the depreciation from 1st of Jan. If you are giving middle of the date of that month, it means that whatever date you acquire the assets in the period, you are going to calculate the depreciation from mid of the month. And the same way you have a end of the date, means you are going to calculate it with the end of the month date. Okay. So likewise, we have to define one for our purpose. Convention, ITC. So product convention. ITC product convention. What was the fiscal year ITC? Depreciate when the placed in service. So it's starting from 1st of Jan. Okay, I can do the quarterly product convention as well as half yearly product convention, but most of the company, as they are following monthly calendar period, so we will have monthly product convention 31st Jan 2015, and the product date will be I am going to use the 15th of Jan 2015. By default, it is calculating our all the product convention. This product calendar this one we have to define till the fiscal year. Okay, whatever the fiscal year we have created, we have to use that one. So we have defined our product convention also. We have system controls. Under system controls, this is these are all the system controls. So this is not going to be a continuous. Now we have to define our book controls. Under book controls, we are going to create a book depreciation book, asset book. Okay, this book control will have some default values based on which our complete fixed assets accounting will be dependent. So let's say ITC overhead. Okay. What will be the class? Corporate, tax, budget. Why we have these three classes? Corporate means it is our own book. Okay, like we have income tax act, we have companies act. So what we do, where at the time of accounting, some companies use corporate act, companies act, and some companies use tax income tax act for recognizing the depreciation. Suppose we are using corporate the companies act to depreciate our assets. We may need a textbook also to recognize the depreciation as per income tax act, and the differentiating figures we are going to use to just for accounting, and we'll see how our income tax, the trial balance as per the income tax will look like, and how our trial balance will look like with the corporate. So most of the companies, they use the corporate as a class. Tax and budget, it is the rare cases. If they want to manage everything in the system, they can very well do it. And if they just want to proceed with the corporate, they can very well proceed with the corporate one. So we are now proceeding with the corporate associated description. So first it is going to assign the linker. IT lecture, allow GL posting, depreciation calendar, IT test calendar, fiscal year also came, IT calendar, current period, we will take from July, divide depreciation evenly throughout the period or by days. You can select. So mostly evenly because for counting of an this will be calculated. Depreciate if retired in the first year. If you enable this checkbox, uh, what will happen if completely depreciated in the first year? So depreciation is there, and if you are retiring one asset in the first year itself, then whether you want to calculate the depreciation for that period, dividing it period by period, or you just want to expense it. Suppose you purchase one vehicle and immediately you sold off it for another. So, though it is a fixed asset, you can very well use this convention of depreciate if retired in the first year. Okay. Then depreciation last run date. Here we define the, we have to give one date when our last depreciation was run. We are giving June 30 last run. So we are going to add few fixed assets in the month of July and we will run the depreciation. Good. Okay. Now capital gain threshold year is 3 years. If it is sold between 3 years, then if we calculate the capital gain also. Allow amortization changes if we are allow mass changes, and if you want allow amortization changes. Okay, sometimes what happen when you transfer the assets line from payables to assets model, when you enable this option, disable automatic merge of payable source lines. Sometimes it merges all the lines and put one asset together. So you can very well disable that as a convention. Then allow revaluation of assets. Right now I am disallowing, I am not going to use it. Allow group asset. Grouping of asset is also possible. Right now I am not allowing natural accounts. It is related to retirement. When you retire an asset, what will is going to happen? What is the gain and loss? So our first account is proceeds of sale. Let's say if I proceed retirement of sales. We have accounts available. So first is the gain 7850, 7851 and 1247. Cost of removal. Let's say well research. Okay, we have gain 52532240, 52532240. Net book value retired. Net book value 78547854. Revaluation reserve for retired asset. Revaluation. So, revaluation reserve 1670. So we use the same 1670. Deferred depreciation. Deferred depreciation reserve 2540. Deferred depreciation expenses. Then we start deferred depreciation at 7860. Depreciation adjustment. Adjustment. Depreciation. Account generator default. CHN accounts why we are giving this because see on this natural account segment we have defined just the account, okay, but what about the other segments? So So for that reason, we have given other segments with the account detail of just one account. And whenever these accounts will be used, it will replace this account over here with all these values. Okay. So this is the way you do the setup for the book controls. That is the corporate book control. And you save it. Once you save it, most of the fields will gray out, so you cannot change it. But here accounting rules and natural accounts, you can very well change it later, but this calendar related details, you cannot change it. So this way done with the book control setups. Close this. Okay, for till today, we keep it here. Tomorrow tomorrow we will have the class. We will be continuing the classes in the complete and tomorrow we will create asset category, asset key, and we'll start using the fixed assets module and run the depreciation and see what is the accounting it is generating. So by this, we will complete the fixed assets module before we jump onto the another module, that is accounts receivable. Okay, Lavanya?
Yeah, okay, sir.
Okay. And I am going to place the videos in the same folder for today's video. So you can very well download from the same folder, the same link which I sent you yesterday.
Okay, sir. So in that last video is not there, sir. That Saturday, the revision video is not there.
Revision video, I will check and put in that folder.
Okay, okay, sir.
Yeah. Thank you. Bye-bye.
Thank you, sir. Bye.